To our first discussion now on the show today. The Nigerian economy has been classified as one of the most volatile economies in the world due to its high dependence on oil revenue. As economic instability is witnessed yearly through rising inflation, massive unemployment, low output and dwindling foreign reserves that result to unstable exchange rates, the country's economic potentials has no doubt been constrained by many structural issues, including inadequate infrastructure, tariff and non-tariff barriers to trade obstacles to investment, lack of confidence in currency valuation, a limited foreign exchange capacity, and worsening insecurity, which is posing a threat to the growth of foreign direct investment into the country. With Nigeria being an import-dependent economy, the impact of the Russia and Ukraine crisis on the economy has seen a steady rise in the price of food commodities and energy costs, causing a socio-economic hardship on the masses. Well, joining me live via Zoom to look at the burning economic issues across the country is the chief consultant at B. Adedikpe Associates Limited, Dr. Biodun Adedikpe. He's also he was a former senior special assistant on financial sector development to former President Obasanjo. Thank you very much for your time, Dr. Adedikpe. It's good to have you on the show.
Thank you so very much, Tolu, for having me. It's a pleasure being here today.
Thank you. I'm going to start with JP Morgan's report yesterday, delisting Nigeria from emerging markets. And what is the argument? They are scared of our fiscal woes and saying that we are not taking advantage of high oil price. What will be your reaction to this, replacing us with a country, Serbia? How does this come to you?
Well, thank you so very much for that. I will say that it's an obvious thing. Obvious because if you look at their own positions as an advisor to investors globally, the question will be, what is happening all around the world, as to give us a brief a couple of minutes ago, and how is Nigeria responding to that? And how will those developments also affect us? So those are the two things you put together on the plate. So how are they affecting us? As you rightly said, commodity prices started rising as a result of that war and the disruptions it brings to economic activities, to trade, and especially to logistics as well. Now, in the light of all this, there's also what we have seen in the market, an uptick in the price of different crude types. So ordinarily, we expect that as the price of crude types started going up, that Nigeria being an oil producer and exporter for that matter, we should be able to benefit from such price uptick. So now, two basic things that will define that benefit. Obviously, they have reason to worry. So advisors on the one side, because all they said is that, look, investors, global investors, when you are rebalancing your portfolio in response to what is happening around the world, you don't need to overweight in sovereign debts of Nigeria. Overweight means you put a lot more money there, because of the high yield, and on the other hand, looking at what is happening in the rest of the world. So if they now say, yes, you can still invest in it, but the advice simply is that you don't overweight. That means you don't put a lot more in that particular, security. That's essentially the advice. So the real issue for us in Nigeria is not to contest their opinion or analysis, but to do a soul searching and ask ourselves, why are we in this situation? What do we need to change? That, in my own thinking, is what the question we should be asking ourselves. What must we do to oil subsidies? What must we do with the place of NNPC vis-a-vis the Federation account? What needs to change also in how we even use the debt that is involved in this matter? Let me leave it there for now.
Interesting, because I wanted to go to NNPC straight up. We had some little audio challenge there, but we got you back, Doc. But NNPC did not make any transfer. That's what they are citing now, from January to March. And that is really threatening. And there's also a plan to raise another Eurobond of $950 million. Where does this place us as a country?
Yeah, thank you so very much for that. Now, my view about it is this. Primarily, conceptually, there's nothing wrong with borrowing. That is the starting point. Now, the second thing is, if you borrow, what do you do with the money? So now, in the last 6 years, we've been putting emphasis in Nigeria that if the federal government borrows, let them borrow only for projects. I've been an apostle of that. That in a situation where you need to grow, you are desperate for growth. If you cannot fund that growth from your normal revenue profile, then there's a need to borrow, especially with the situation of infrastructure deficit we've been talking about for years, maybe decades in Nigeria. But the issue now for us today, which is what I want to emphasize, is no longer about borrowing to fund projects. We should now be more specific. What types of projects? Are those projects having commercial content? And this is the way it plays out. Now, if the projects have no commercial content, that means you are unable to generate revenue from those projects to be able to service the loans you take and also repay at maturity. In which case, if the so-called projects you are borrowing for are mostly social in nature, that means the benefit you can derive in terms of those projects generating revenue with which you can repay the loan will become questionable. So for us, therefore, my own position is that if we are borrowing at all, it's not about borrowing because they are going to project. The question will be which projects. And that's why I always like this argument of saying that, look, the fact that somebody is in the cabinet is not an assurance that a road to his or her village will become a priority project. It should be now about the economic value of those projects and whether those projects are in position where they can generate revenue to pay them off. The project finance, we call it, we use the terminology of recourse or non-recourse, as the case may be. So in which case, if I borrow to do a project, I don't need to look elsewhere for money to repay that loan or service it. Rather, the project itself will generate sufficient revenue and throw up enough cash to repay the loan and service it. That's the major challenge for us in Nigeria today.
Let's follow up, staying with debt, Dr. Adedipe. Debt service to revenue ratio has been that major challenge for debt management, and we know that we're servicing our debt at about above 90%. Between January and March of 2021, we're doing more than that. Now, sustainability is what I also want to ask. How do you see us sustaining this, Dr. Adedipe?
Yeah, thank you so very much. Now, the nexus is simply this.
Okay.
If ordinarily the borrowed funds are used for projects that will energize economic activities, more value will be created. And the value created will also drive government revenue in terms of taxes, levies, and other things. So in which case, in the course of that, government revenue will also increase. So its capacity, therefore, to service those loans will also expand. But where that is not expanding, ordinarily, the debt servicing revenue ratio is the mere ratio. Ratio is just a comparison of two numbers. All right. So if the numerator is going up and the denominator remains stagnant or is growing at a lower rate, then that ratio will go haywire. And that's what we are seeing here. So until that denominator, the revenue itself also increases. And that's why, as I said earlier on, we must change the narrative of what we borrow to do. Okay? If we borrow to do things that will help the economy to expand and grow, then chances are that as corporates and other taxpayers make more money, they pay more taxes. And government therefore will be in a position to also service and repay those loans. So until that happens, we continue to look at that ratio, that it keeps worsening. Because as you borrow more, you increase your loan servicing, and at the same time, the obligations to repay at maturity becomes a challenge, which is probably why the IMF recently suggested to Nigeria that we need to go back to what we did in the 1990s. And need to reschedule our current, debt stock. So rescheduling means if we are to pay all this up within the next 10, 15 years, can we restructure it and repay over a 30-year period? Which means then that will reduce what is due for payment in each of the years between our 30 years to start with, and then also the interest obligations arising from that will also reduce somewhat. That is the whole idea, okay? So the way we are going now, that's because, in my own estimation, inevitable. We need to start talking about rescheduling and restructuring, and at the same time be more disciplined in the way we borrow and also utilize the borrowed funds.
We've also seen rate increases across board. Even the Fed, there was a shift. So I'm thinking the NPC will have a lot in their plate in their next meeting, inflation and all of this to grapple with. What are you thinking, and what will be your suggestions for them?
Well, you know, at the beginning of the year, the Fed indicated that, okay, we are going the way of normalization, but we're not going to be that aggressive about it because the inflation we are looking at now doesn't appear to be permanent in nature. But before the end of the first quarter, it became obvious to the Fed that, look, the inflation US is dealing with is now getting to a range that they saw last some 40 years ago. And that the way it has also behaved in the last couple of months doesn't indicate that this is temporary, so we needed to act. So typically also, and looking historically, the Fed always moved up the policy rate by 25 basis points. But in desperation to address the inflation rate at over 8%, they now went for 50 basis points. Now, that is part of what also caused the kind of reaction and response that we saw in the report by JP Morgan. And that the fact that if the Fed is normalizing, that is raising rates and also moving away from quantitative easing, that means you find yourself in a situation where any investor that was looking at the rates in the US as much lower compared to rates in the emerging markets, and then looked at the risk implications of investing in the two markets and says, look, the risk differential is not enough for me to take up my investment from emerging markets back to the matured and advanced markets. But now with rates going up at 50 basis points, or like the historical 25 basis points of the last 22 years, naturally investors will begin to look at the more matured market where the risk is lower. And so what does that mean for us? It means that we also, at this point in time, have to respond to that, especially also looking at the issues we discussed earlier on, the fiscal position in Nigeria, and of course, our external balances and the rest of it. So many issues on the plate, as rightly said. A lot for NPC to consider in their next meeting. The plate is really full. And so I don't imagine that they will likely have the next meeting and leave the policy rate where it is currently, because they have to also respond to all of these developments, which in some instances are looking like emergency. Let me just leave it there. Okay.
All right, moving on. Let's talk a little bit about politics. It's in the air already. We see it. And of course, it shapes our economic prospects and all of that. Are you thinking that governance will go to sleep, like some will say, at this time? And what effects do you see all of the monies that will be coming out? Yeah, of course, firms have sold for as much as 100 million in one of the parties. So many are saying that all of the money is in circulation. I'd like you to give us that professional perspective and what it means for us, the masses.
All right, so now these are the basic issues in it. Now, 2022 is a pre-election year, as you have heard also since 1998, all right, till date in Nigeria. So there are certain peculiarities of a pre-election year. As you rightly observed, by the time you get to the second half of the year, that is between July and December this year, you are going to see a lot of money move around for electioneering campaigns and other things, all right? Given that there's a likelihood that the liquidity in the economy to start with, and also in the banking system, may likely go up. And now, and that is why the question you asked about MPC earlier becomes relevant. It then means the Monetary Policy Committee should be looking at how do we checkmate the liquidity surfeit that these political activities will likely cause. That is on the one side. Now, the second side to it is this. The way we are also playing the politics, will it inspire confidence in investors, both domestic and international? Because typically also, if you look at the pre-election years we have had, like I said, since 1998 till date, there's a particular pattern with capital importation. There's also a pattern with new, let me call it, with a sentiment of people either remaining here doing their normal economic activities or going elsewhere to observe from a distance. We've seen that pattern over the years. So the way our politicians play the game will determine the confidence that economic actors will have in this particular period. Now, another part to it is this, and that is the fact that when you look now at the political parties, especially the major ones, until they do their conventions and then now bring forward their candidates, that is when we begin to now make projections of what may likely be the economic policy direction of any of those two candidates. That is talking about the two major political parties today. We look at the candidates, look at their antecedents, and then consider the sound bites that they are bringing out to the public. So those sound bites will give us an idea of what they may likely adopt as their policy direction if they win the election. So we form an opinion as to what to expect going from 2023 June, let me put it that way. But between now and May 2023, normally, again, as I said, looking historically, governance seems to slow down somewhat because everybody will be spending more time either going out there or looking out there. That is for those who are currently running the government. So governance typically will somewhat slow down between now and the next 1 year, when we expect the whole process to end and there will be, a handing over of the party.
If we can do this in 2 minutes as we wrap up, would this affect already all of the projections that we have for economic growth and all of that, GDP, and where do you think inflation will be at that point?
Well, normally, once liquidity, is on the uptick and there's no clear, policy to address that, either from the monetary policy side or from the fiscal side, which is government itself directly, then we may expect inflation to go up. And there are two things being managed here. There's the actual inflation rate and there's the expected inflation rate. As of today, the expected rate is higher than what we are looking at today. So we may expect the inflation rate, therefore, to go up. But again, it depends on what NPC does with the policy rate and a couple of other, reserve requirements. And of course, what federal government also does in terms of whether they go disciplined in fiscal operations or not. Now, put those together, we then come to the fact that, look, what may likely happen to the growth rate of the economy? Now, at the beginning of the year, our Fed made a projection of 3.74% growth for the Nigerian economy this year. Now, by the time we get to July, that is after the first half year, we go back again and review all those determinants that we look at to make a decision. But if I base it on what I see today, there of course going to be a dampening of that 3.74 to something lower. But of course, I won't put anything out right now until we get to after the first half year, when we do our normal review in BA Consult. So thank you very much.
All right, there we'll be here to analyze it when you release those figures. I'll be speaking to Dr. Biodun Adedipe there, who's the Chief Consultant, B. Adedipe Associate Limited, also a former Senior Special Assistant of Financial Development to President Obasanjo. Thank you so much for your time and do enjoy the rest of your day, sir.
Thank you very much for having me.